Okay, guys. So, guys, in the previous class, we were talking about corporate actions. So, we have started discussing about mandatory corporate actions, and we discussed about dividend, right? And also, I gave you an assignment. What was the assignment? What was the assignment? Yeah. So here, so we spoke about cash dividend because this dividend we have two options. One is with the cash, another one is stock. We can accept in the form of cash, or if company is offering any shares in the form of cash, that is called in kind, dividend in kind. So we can also accept in the form of shares and stocks. So what would be the impact if we are receiving stocks instead of receiving cash? If we receive the stock, what would be the impact in a cash and number of positions and dividend? So I ask you to prepare that one. Has everyone done that? Has everyone shared the assignments with me?
I I don't know, Mahesh, because I am not there in the class.
Okay, remaining people, at least one person.
In my perception, if you give the cash is one-time settlement. If they give the shares,
No, no.
there will be a. Okay,
We
sorry.
discussed about the impact in all these things. What is the impact on
Okay,
cash, positions, price of share, and the NAV of fund? We
okay,
spoke about all these things.
okay.
Okay, let me cover this point here. I know I think you guys didn't complete this work. So let me complete it here. Okay, guys. So in the cash dividend, we already discussed, right? What is the impact on cash? We understood cash will reduce. I mean, sorry, whenever we receive from the fund perspective, cash balance will increase. Similarly, number of shares. There is no any change in the number of shares because we are not receiving shares and we are not selling the any shares. So there is no any changes in the number of positions. Price of NAV. We discussed and we understood the price of NAV, price of share will reduce because we are paying, the company is paying out of the equity part. In a company balance sheet, we have this reserves and profits. Normally, the dividend should be paid out of this profits and reserves only, which is obviously the part of equity. So, whenever there is a reducing of value from the equity, there will be reducing of share price again. That's the reason share price will reduce in short run. And NAV of the fund. So, what would be the impact of NAV in case of cash dividend? We understood there is no change. Now is not going to change any uh, value of now because of this cash dividend. We also understood the reason why there is no change. Can anyone tell me why there won't be change? Again, in the Sunday class also we discussed about it. And Sunday or Saturday somewhere we discussed about all these points in a question and answer sessions. So as we're receiving the cash balance and also the share value will be stated in the asset side only. See here, if I'm holding 100 shares in TCS company, the 100 shares will be available in the asset side. Similarly, the cash balance also will be available in the asset side only. So by increasing the cash balance, the share price will reduce to the same extent. So again, it will set up the same balance between the cash balance and share value balance. That's the reason there won't be any changes in the total asset. If there is no change in the total asset, even there is not going to be any change in the NAV of the fund also. Okay. Now we will see the impact of a stock dividend. Again, in terms of cash. As a fund, if I receive in the form of stocks, is there any impact on the cash balance?
No
If I
impact on the
receive
cash balance.
if I receive dividend in the form of stocks, am I going to have any impact on the cash balance?
No.
No,
Everyone?
sir.
No, right?
No,
No change. There won't be any
sir.
change because we are not receiving in the form of, please keep it on mute, Jyoti, Manaja. Yeah. So we are not receiving in the form of cash. If cash is not coming out, if cash is not going out, there won't be any changes in the cash balance. So there is not going to be any changes in the cash balance. Similarly, the number of positions. Earlier,
We-
my fund is holding 100 shares. Suppose if they are paying, if they are sending uh, 15 shares extra. So with this stock dividend, for my 100 shares, I'll be receiving 15 shares. Now tell me, is there any going to be change in my number of shares, number of positions?
Yes.
Yes,
Yes.
sir.
Increase.
Will be
Yes,
increase.
definitely there will be increase.
Increases.
Increase.
Increase in positions. Price of a share. Are we going to have any
No
impact
impact.
on the price of the share?
No,
Hmm?
no impact.
Hey.
What about remaining people? Are we going to have a changes in the price of the share?
No.
Why? From where I'm issuing this 15 shares? How I'm getting this 15 shares?
In the
So
profit.
in the fund balance, I do have a capital and a profits.
Profit like
Even,
that.
even if it is the company balance sheet also, I should issue some shares out of any one topic. I need to, I mean, I need to issue any one element. From that element only, I need to issue the shares, right? What is that element? Am I going to receive a cash for this extra 15 shares? If company is issuing 15 shares extra, is company is going to get any cash balance? Is company is receiving any
No.
cash balance?
No.
No, no, sir.
No,
No,
but
sir.
still they're increasing their number of shares. Just understand, guys. TCS company holding already like 1,000 shares. Okay,
Yes, sir.
and they do have a profits, reserves, and the remaining everything they have. In addition to that, for my fund itself, they're issuing 15 additional shares. If company is issuing 15 additional shares, I'll receive 15 shares extra. Even TCS shares will also have a additional 15 shares, right?
Yes, sir.
Yes, right. Yes, right.
So how can they issue extra 15 shares without receiving cash?
Sir, dividend వచ్చింటప్పుడు సార్ దాంట్లో నుంచి
Yeah, dividend, how they will pay? From what is the source for dividend?
ప్రైస్ ఆఫ్
Whatever the
షేర్స్ సార్.
Well, they are not paying in the
whatever
form
the
of cash. So cash is not going out.
Yes, sir.
But still they're issuing 15 shares extra. Even their balance sheet will also increase 15 shares. TCS shares will also increase from 1,000 to 1,015.
Yes,
But for
sir.
these 15 shares, where is the source?
whatever the capital, whatever the profit they have received, that profit convert into capital.
Exactly, guys. So it's nothing but whenever we are issuing the shares, additional shares to the people in the form of dividend or in the form of bonus, we need to convert one element. That element is called reserves. We have this reserves, right? We just have to convert this reserves. Even if it is a cash dividend, we paid out of the reserves only. We have a profits and reserves. The same reserves will reduce and we are paying in the form of cash. But here we are paying in the form of shares. If we are paying in the form of shares, definitely TCS shares will increase. Whatever the number of shares TCS increase, the value of same shares should be reduced from the reserves. Simply they're converting reserves to shares. That is the purpose of stock dividend. Is everyone understanding? They have a reserves profits.
Yes, sir. Yes, sir.
They are paying these profits in the form of shares. So shares balance will increase. If they are paying in the form of cash, cash balance will reduce. But here they are not paying in the form of cash. They are paying in the form of shares. So obviously shares balance should increase. So whenever there is increasing of share balance, the reserves will reduce. Understood?
Yes, ma'am.
Everyone. Whenever there is a payment out of reserves, again share price will reduce. Again share price will reduce because they're paying out of their profits only. That's the reason it will get reduced. Then what is the impact on NAV? Is there any
That
impact
is
on
also
NAV?
reduced. That is also reduced. Now, even share price reduced, means NAV will be reduced.
No, there won't be reduced.
Oh,
Are you
sorry.
guys thinking like
Correct.
NAV price will
Correct.
reduce?
Correct. No, correct. Sorry.
Here share
Sorry.
price will
It's
reduce. But
but
number of shares are increasing, right?
yes. Yeah, NAV will be
So
same.
yeah, denomination is also increasing and numerator is
Only
also increasing.
yes, only reserves convert into capital. That same thing will be there.
Yeah, the total value per share will reduce, but number of shares are increasing, right?
Yes, automatically correct.
So again, the total value of asset will be the same. So again, there won't be changes in the total NAV of fund
No.
also.
Correct.
Understood? Everyone. Is everyone understood?
Yes, sir.
Okay. Then we'll
సార్
talk about.
NAV ఇంకొకసారి చెప్పండి సార్.
See, in the cash balance, we understood, right? Cash balance will increase and share price will reduce. So that's the reason we had no any changes in the total NAV of a fund. Even in this case also, there is a increasing in number of shares. Number
Yes,
of
sir.
shares will increase, but for the
Yes,
same
sir.
extent, share price will also reduce, right?
Yes, sir.
So again, that will get set off. Again, total assets won't change. Whenever there is no change in the total asset, the NAV also won't change. Simple logic. Here,
Yes,
number
sir.
of shares increasing from 100 to 115, and here the value of assets will also reduce to the same extent. The value of share price will also reduce to the same extent. So again, it will be the same amount. That's the reason there is not going to be any change in the total NAV of a fund. Okay. Everyone understood? Everyone.
Yes, sir. Yes, sir.
Then we will
Yes,
talk
sir.
about stock split. What is the meaning of stock split? We will understand the meaning of stock split. Stock split is nothing but they will split the share into two or more than two parts. Suppose there is a company share. Again, let's say for example, TCS company share only. TCS company one share price at market, which is trading at 1,000 rupees. Which is trading at 1,000 rupees. Maybe the face value is 10 rupees. We understood, right? Why there would be a difference between a face value and market value? Is everyone remember?
Yes, Mahesh. Yes, sir. Yes, Mahesh.
So the face value will be 10 rupees, but the market price is 1,000 rupees. So if you want to purchase one TCS share, how much you have to spend?
1,000 rupees.
1,000 rupees, sir.
1,000 rupees you have to spend.
Yes, sir.
In this case, if company is going for a stock split, if company is announcing stock split in 1:2 ratio, 1:2, that means one share will be divided into two shares. Whenever they're announcing in the form of ratio 1:2, the stock split, everything will be announced in the form of ratios only. So if they're announcing in the form of 1:2, that means one share will become a two shares. That is called stock split. Sometimes they will give like this 1:4. In this case, what is the meaning of 1:4?
One share
One share will become a four shares.
4 shares.
One share will become a four shares. Okay. Let's understand 1:2. If they're announcing a dividend, they're announcing stock split in the form of 1:2. Again, let's take the same example. Our fund is holding the same example. Where is this example? Yeah. Let me create like this. ABC fund, they have assets, shares. We're holding 100 shares of TCS. Okay. The value of TCS is maybe each price is 1,000 rupees. For 100 shares, how much it would be? 100 into 1,000. This is the market value
10,000.
available in the stock split. Okay. And we have some
1
other
lakh, sorry, 1 lakh.
cash balance. We have, let's assume we have a cash balance 1 lakh. Only these two assets we have. Okay. Now they're announcing 1:2. That means one share will become a two shares. One share will become a two shares. This is the situation before stock split. Okay, this is called before stock split. Before split. Now I need a situation after split. After split. So how many shares I'll be holding?
After split
Oh,
also
okay,
same,
100.
Mahesh. Only 100 shares will be converted into 200 shares.
100 shares will become how many shares after split?
200.
200 shares.
200 shares. 200 shares of TCS. And what will be the value of each share? The total value of 200 shares.
Same, 1 lakh rupees.
Are you guys all
Yes,
sure?
sir. Yes, sir.
Because
guys,
they,
if you had a one
they
share, which
only,
is 1,000 rupees, or 200 rupees, it should be 2 lakhs, right?
they only split
Oh.
the shares, not for the amount.
Yeah, amount, yes, sir.
Like a basic example, I'll tell you. We have one product which is attached, or which is something like a pipe which we can measure in terms of meters or something. Okay, there is a 1 meter cable. If 1 meter cable is 100 rupees, if we cut down to the two parts, 50 meters, 50 meters, 1 meter cable means half meter, half meter. Would you think that value for half meter pieces will be the same?
No, it will
Even the
be
value for same value
value
product
also
will
reduce.
reduce to the same extent, right?
Yeah, 50%.
And also, they are just splitting the share. That means they're dividing the parts. There is a one part which is 1,000 rupees. They're dividing, they're making it as a two parts. So each part will become how much?
500.
500 rupees only. So earlier company had a, let's assume TCS shares are having 1,000 shares. TCS was having 1,000 shares. After splitting, how many shares it will happen?
2,000 shares.
In TCS company also, it will become 2,000 shares. What would be the face value?
10 rupees.
Do you think face value will be the same?
Yes, sir.
No. Face value will also reduce to the same extent. It will also become 5 rupees. There is no point, right?
Oh.
Earlier, when I was 1,000 rupees, when I had 1,000 rupees face value, when I have 1,000 rupees market value, face value is 50 rupees. Basically, they don't even reduce this market value in real terms. They will just reduce the face value. The stock split will be applied on the face value only. If face value is reducing, the same extent market value will also reduce. Directly, they cannot split the market price. Market price is something that we have given in the stock market that we cannot split. Simply, they will apply the stock split and face value only. But we don't talk about this face value stock split because we always consider the stock split impact on market only. That's the reason we are considering the market share price. But in real time, they will implement the stock split and face value. So whenever the 10 rupees share will become 5 rupees, the market price will also reduce from 1,000 to 500 rupees. And one share will become 2 shares. Is everyone understood stock split?
Yeah, man.
So
Yes,
basically,
sir.
why companies should go for the stock split? What would be the reason why they have to go for the stock split?
To influence the price and
Because of face value,
liquidity.
face value
Liquidity.
decreasing, of liquidity, face value decreasing.
Yeah, that's why we are decreasing the face value through this stock split. But what would be the reason why they have to go for stock split and why they have to reduce the share price and why they have to increase the number of shares?
To increase the liquidity and price.
Price, no price, we are not increasing. It's just price reducing, right, from 1,000 to 500. So we are not increasing the price.
Main reason is liquidity only.
Yes, liquidity only. Basically, to increase the
Yes.
liquidity. Just understand, we understood about the liquidity, right? If more people are coming to purchase the shares and doing the trading, the liquidity is very high. So that impact cost will be less. In the primary market, we understood the relationship between impact cost and what is this? Liquidity. Whenever there is a high liquidity, the impact cost would be very less. Suppose we have MRF. Know what is the share price of MRF? Because I think it's more than 1,50,000. So normally
Yes.
it's not available for the retail investors. Maybe for big investors will come and purchase the MRF share price. But what about the retail investors who are doing a trading with 2 lakh rupees or 3 lakh rupees, even it's 5 lakh rupees? They won't show much interest to purchase MRF share because with their 10 lakh rupees or with their 5 lakh rupees, even if they want to do trading with this MRF trade, they can purchase up to only 2-3 shares only. So retail investors won't show that much interest to do trading on those kind of shares. Whenever there is a share price very high, they won't show much interest doing trading on that one. So for that reason, the trading and the market will, that liquidity will be very less if you have a huge share price. So if they want to cut down the share price, what they can do? They can go for the stock split. Maybe by reducing the face value, they can reduce the market price as well. Simply, we are making it available for the normal retail investors also. So that more marketability will be there in the trade, more trading activities will be done on the share, liquidity will also increase. That is the main reason.
Recently, from May 1st onwards, Nifty Bank, Nifty 50 also reduced their lot size 50 to 20.
I'm not understanding, sir. Your voice is a bit disturbance.
Nifty 50.
Okay, Nifty 50.
Nifty lot size is decreased 50 to 25.
25. Okay, so it's going to be Nifty 25. Huh?
Yes.
Okay, great, great update. So we spoke about indexes, right, guys? Nifty 50. So you're saying that Nifty 50 is going, I mean, there will be 50 stocks, like from top performing and depends upon the industry size and company size, marketability. 50 companies will be selected. So their indexes will be considered for the Nifty 50 as an index, but they are going to reduce it to 25 stocks only.
No. Lot size is 25. Previously 50. Lot size is 50. Now 25 lot size. Nifty 50 is previously when you buy the Nifty 50, you have to buy 50 shares minimum.
Okay. You're talking about purchasing quantity, selling
Yes.
trading quantity, lot size.
Yes.
I thought that
Lot
it's
size should
changing
be.
the
No.
indexes,
No. It's not.
Okay, got it. Okay, so this is the stock split. So we understood the stock split, right? Now we'll understand the impact. Again, the same impact. All these four impacts we'll understand. Okay. Now tell me, because of the stock split, is there any change or impact in the stock? Cash?
No.
No change.
Hmm?
No change.
No change. Is everyone sure with this? Why there is no
Yes.
change in the cash balance because of the stock split?
Shares will
Yes,
be
sir.
changed.
Yeah.
Cash
What about
will
the positions? Number of shares? Is there any change in the number of positions?
Increase.
Yes, sir.
It will increase.
It's doubled. 1:2 means
Sorry.
double.
It will decrease. What about the price of share? Checked.
Red.
Number of shares will
Number of
increase.
shares
No change.
The number of shares will increase.
Increases.
And price of share
Decrease.
decreases, sir.
decrease. Okay.
Yes.
You understood the changes, right? Everyone
Yes,
got
sir.
the clarity?
Yes, sir. Yes, sir.
What about the NAV of fund?
NAV of fund will be
No change.
Just think once.
No change, bro. Same.
We are changing the number of shares, right? If I do the NAV value per share, number of shares will be more, right? Any confusion like that?
no,
No, guys.
nothing. No,
We,
nothing.
we calculate NAV per share, right?
Yes.
Yes, sir.
How we calculate NAV per share? Total NAV divided by
Mine. Number of shares.
number of shares outstanding. This is how we understand, right?
Yes.
So you're saying that there is no change in the total NAV because no change in the cash balance, no change in the asset value, but number of shares outstanding increasing, right, from 100 to 200. So do you think that we have a changes in the NAV per share? Just think once.
As per this, NAV will be decreased actually because the number of shares will be increased automatically.
What about okay? Let's cut down this question into 2 points. First, we'll talk about total NAV. Is there any change in the total NAV?
No. No,
Why it's not? Why there is no change?
Because there is no impact on the amount wise, only impact in the shares wise.
Yeah. So there is no change in the total marketability, market value. This is called
Yes.
market value.
Yes, sorry.
Market capitalization. We call it as a market capitalization. There is not going to change any market capitalization. Earlier we had 100 shares. The value is 1 lakh. 1 lakh into 100 into 1000 rupees. Even when you have 200 shares, again the same price 200 into 500 will apply. Again it's going to be the same 1 lakh rupees. So total assets we are not going to change. So there is not going to be change in the NAV of a fund. No change. What about NAV per share?
Decrease.
Are you sure?
Because why? Because if suppose previously share price is 100,000 rupees, now split into 2, it should be 500. Like that, now per share also it will be decreased.
So whose NAV it is? Whose NAV you are calculating?
Now per share.
No,
Per
no.
share now.
Is it a fund NAV or company NAV? Are we calculating TCS NAV? Are we calculating the fund NAV?
Fund NAV.
Fund NAV, right?
Yes.
For fund NAV, why you are considering these shares? These are investment, right? Shares will be available on the left side, capital side. I didn't even listed those capital number of shares. Why you are
Okay.
considering these shares?
Okay. Okay.
These are investments. That's a major confusion with our accounting students. Simply
Okay,
we will understand. Even interviewers will also try to confuse you. Because of stock split, number of shares will increase. Yes, number of shares will increase. Where? In our holdings. Are we going to calculate NAV per share with these shares? No. Fund will also have a number of shares. How? Depends upon the subscription. People will come and subscribe, right? Number of units. We understood, right? In the fund accounting, when you're talking here, see here. These are also shares. We are considering this number of shares for the calculating NAV. No, we cannot consider these shares. These shares may be 100 shares or 200 shares. How? We cannot consider these shares. It can be any number of shares. Investments. What number of shares we have to consider? We have to consider these 10,000 units. As a fund, we have this capital, 10 lakhs, which is contributing from this 10,000 units. If you are calculating total NAV, how you are calculating? Total NAV divided by this number of shares, 10,000. Is everyone understanding?
Yeah.
Yes, sir.
Fund shares you have to consider, not the investment shares. Maybe they have 200 shares investment in TCS. Another 100 shares will be available in MRF shares, MRF company. Maybe another 100 shares will be available in Tesla company. We are not going to consider those number of shares to calculate NAV. Fund NAV means what? Total NAV of a fund. Total assets of fund. We will reduce all these liabilities and we will consider number of units of the fund. Here in this example, where is the number of units? I didn't even list it, right? Why you are
Correct.
considering this number of shares? Do not confuse. These are assets. These are my holdings. Number of shares outstanding of fund. If you are calculating fund NAV, number of shares outstanding of fund only we need to consider. These are not our holdings. These are not our number of shares outstanding. These are called holdings. We are holding in TCS company as an investment, as an asset. Is everyone understanding? Hello?
Sir. Yes, sir.
Yes, Mike. Yes.
Yes,
That's why
Mahesh.
I told you number of shares in a holding as an investment is different. Number of shares available in the fund as for the subscription redemption is different. What they can do with this 10,000 units? Why we have 10,000 units in the fund? Why? Come on guys, why we have divided these units into 10,000 units? As a capital, as a fund, if you want to start investing, how much capital we need?
Yeah.
We need this 10
For
lakhs.
cap, 10 lakhs divided
10
into.
lakhs, sir.
We need this 10 lakhs. To collect this 10 lakhs fund, we divide into 10,000 units. So if you are calculating
Yes.
NAV, total NAV of this fund divided by number of shares outstanding of that fund only we have to calculate. As a fund, it may be holding in different shares in different companies. We are not going to consider those asset details, those asset number of shares. We have to consider only the number of units holding by fund. Is everyone understanding? Difference between the shares holding, difference between the shares available in the fund. Everyone.
Yeah, Mike.
Yes, sir.
Now we understood the stock split. Now we will understand the reverse stock split. What is reverse stock split? What is the reverse
Like
stock split?
2:1.
Suppose same example we will consider. TCS company having a 10,000 face value. The same example we will consider here as well. Okay. So TCS company having 1,000 shares. Each share price is 1,000 and face value is 10 rupees. Now, if they're announcing reverse stock split is nothing but in a previous case, what they did, they reduced the share price and they have increased the number of shares outstanding. So 1,000 shares become 2,000 shares. 1000 rupees share price become 500 rupees.
500 rupees.
But in reverse stock split, it will happen in reverse way. They will try to reduce the number of shares and will increase the share price. How it will happen, sir? Suppose we have one share, right? They will combine this one share into two shares. They will combine it into one share to two shares.
One share
Or else,
into
sorry, two shares to
share.
one share. So that obviously share price will increase.
Yeah, every 2 shares calculated as a 1 share.
Suppose they're announcing in the form of 2:1.
2:1.
That means every
Yes.
2 shares will become one share. Every 2
One
share will
share.
become one share. So company is having how many shares? 1000 shares. So it will become
1000 shares, sir. 500.
500
shares.
shares. Whenever there is a reducing of share price, we are clubbing
500.
2 shares. It's just basically clubbing and summing 2 shares. So earlier we had a 1 share, each 1000 rupees. When we are making 2 shares into 1 share, what will be the each share price?
2000.
2000 rupees.
Per share it will become 2000 rupees.
2000 rupees, sir.
What would be the face value?
20 rupees.
It will also become
Face value, yeah.
to 20
20
rupees.
rupees, sir.
Even face value will also increase to the same extent. So in this case, what's happening? Number of shares are decreasing, share price is increasing. Okay, sir, if it is a stock split, we understood maybe to increase the liquidity, they're going for the stock split. Why they have to go for the reverse stock split? Why we have to make it as what is a more share price?
Liquidity only.
Again, liquidity. Huh?
Yes.
How do you think that people will purchase if you're increasing even the share price?
Sir, cost
Like,
price
If
decrease
because of speculation, bro, if stock price is less amount, it is trading less price. Then market, participants will be less. Participants will be
No.
there.
Marketability and the liquidity is only for the stock split, not for the reverse stock split. There is no point, right? Maybe if they're reducing the share price, there would be more chances to purchase and do trading. In that case, we can say it's for the liquidity. But in reverse stock split, there is no point, right? Maybe you have 50,000 rupees each share price. Do you think that if I'm making it 1 lakh, people will purchase more on that share?
No.
No, sir.
Then what will
Like
be the
in
reason?
the penny stocks, no much participation will be not there, no, bro. So that's why to increase the liquidity and market participation.
No. Market participation in which category? We understood different categories of investors, right? Retail investors, institutional investors. Let's understand.
Retail
Suppose
investment.
suppose we had a share price of like MRF 1,53,000. Do you think that retail investors will show a lot of interest to purchase 1,50,000 share worth?
No.
No. So what kind of investors will come and participate in that kind of shares?
HNI customers.
Maybe retail investors, high net worth investors will come to participate, do trading on that, right?
Yes.
Similarly, the reverse stock split also will be done in order to increase the
HNI customers.
traders from the institutional side.
HNI. Institutional traders, sorry.
Yeah, like if they want to attract institutional investors, like maybe from the hedge funds. Hedge fund is like institutional investors only will come. If they want to do trading, like institutional investors will come and pick our stocks. To increase that category scope, they'll go for it. And also one more thing, if there is if share price is very less, there will be a lot of volatility, isn't it? Suppose we have a share price of 10 rupees. If it has reduced from 10 to 8, what will be the percentage of reducing? 20%, right? Right?
Yes.
It means
Yes,
there is a
right.
lot of
Sir,
volatility. Lot of volatility. 20% a lot of volatility. Suppose my share price is 1,000 rupees, and if it is reduced to 980, do you think that we have a lot of volatility?
No, not
No.
that much.
No.
Not that much, right? Only
No, sir.
20% change. If I calculate the 20 divided by 1,000 rupees, what is the percentage? 2% only. But in this
Yes.
case, 20%. Here it is reduced 2 rupees. Here it is reduced 20 rupees. But volatility is percentage is 2%.
20% and 20%.
20% to
Here it is
2%.
20%. Lot
Yes,
of
sir.
difference, right?
Yes, sir.
That's the reason, guys. To reduce the volatility, they can increase the share price. And one more thing, In order to avoid being categorized as a penny stock, we have a categorization in the industry as a penny stock. You know what is penny stock? Small stock. If our share price is 10 rupees, 5 rupees, 20 rupees below something, industry people will categorize it as the penny stock. That means we have a high volatility risk. We have a S bank share. These shares are available below 20 rupees or something, I think. So we call it as a penny stock. So only retail investors will focus on that. They'll do it for the normal intraday trading and all. They used to prefer for the purchasing and doing the shares trading. So in order to avoid being categorized as a penny stock, they'll go for the reverse stock split so that they can increase the stock split. I mean, they can increase the share price and also to improve the market perception. Higher stock prices always may improve it helps to improve the market perception of the company because if market share price is very high, definitely there will be a potentiality is going something like investors will feel that okay, company is having more value. Like that they will feel. That's the reason they'll go for the reverse stock split. Okay. This is the common reasons. Everyone understood the reverse stock split?
Yes,
Yes.
sir.
Now we will understand the same impact. What would be the impact? Please keep it on a mute. Okay, now tell me, is there any change in the cash?
No.
No, sir.
Right? No change. Okay. What about positions, number of shares?
Decrease.
Change, sir.
Is it going to increase
Decrease.
or decrease?
Decrease.
Decrease, sir.
Decrease.
Decrease, sir.
Reverse stock split, number of shares will reduce. What about price of share?
Price of
Prices
share
are
is
increased.
increase.
In- Increase.
It will increase. And what about NAV of fund?
Increase.
Never fund all.
Hmm? Will it increase?
Yeah.
Come on, guys.
Never
Open up.
fund increase. Never fund increase.
NAV fund will increase, huh?
No. Actually, the
How
same
it's going to
because
increase?
what?
Suppose
No,
understand
same.
the
Sorry.
same thing.
Same. Sorry. Same.
Suppose before split, we have 100 shares, 1000 rupees. After split, it's a reverse split, okay? Okay, now tell me, how many shares it will happen? 100
500.
shares will become 50 shares, right?
No, sir.
After ECS. Earlier I had how much? 100 rupees or 1000 rupees. 100 shares, 1000 rupees. So what is the share price after
2000, sir.
so reverse stock split 2000, right? How many
Yes,
shares?
sir.
500 shares.
50 shares.
50 shares. Okay, sorry. 50
50
shares.
shares.
Into how much?
2000.
2000. Any change?
Same amount. No, sir.
Allotment 2000.
No
Same,
change.
right?
No change.
So no change in the total value of market capitalization. So there is not going to be any change in the NAV of a fund also. Do not confuse, guys. The stock split and reverse stock split only will impact positions.
Positions.
Positions. There is always one question from the interviewer side. What is the corporate action that won't impact any cash balances, but only the positions it will impact? This is a common question. There won't be any impact on the cash balances, but only in the positions there will be impact. What is that corporate action? The impact
Split.
in the only
Split and reverse
positions
split.
is due to stock split and reverse stock split. Only these two, stock split and reverse stock split, will impact positions. It won't impact a cash balance. It won't impact any NAV of a fund, but positions only will impact. Position breaks only possible in case of stock split and reverse stock split. Okay. In NAV fund also, no change. What about NAV per share?
No change.
No change. Here also, no change. Understood, guys? Now, everyone understood? So the stock split and reverse stock split both are mandatory. So we discussed mandatory corporation. How it's mandatory? Can't we have a choice from the investor side? Like, no, sir, I don't want to reduce my share price to 500 rupees. I want to keep my share price as 1000 rupees only. Like that, can I ask them?
No.
No,
No.
there is no choice. If company is reducing the share price, it will apply to all shareholders, irrespective of their irrespective of their wish and irrespective of their what is the acceptance. It will be applicable for all number of shares. If company is holding 1,000 shares as a TCS company, the stocks will be applied for entire 1,000 shares. There is not going to be any exemption for any shareholder. That's the reason we have been classified it as a mandatory corporate action. Okay. Then we have a spin-off. I'll talk about spin-off. Then we'll go for the mergers and acquisitions. Okay. Spin-off. What is spin-off?
Combining two companies which are in the same sector, or
Combining.
combining, merging the companies which are in same sector, or say which are in same business, or one company is divided into two companies. In these two, one is there. Like example,
Off,
Jio
guys.
and Reliance,
If
right?
two companies are merging together, we have a merger, right? Why we have to call it spin-off? What is the meaning of spin-off?
Okay, one company is divided into two companies.
Yes. See, basically, as an industries, we have a more
Like
industries.
example, Reliance and Jio now separated these two.
Yeah.
Best example is.
Basically, Jio was the part of Reliance only, right? Initially, but it was a separate telecom industry. They had telecom industry. What they did, they make it as a separate legal entity. I'll tell you. Suppose we have a company established as the Reliance Private Limited. Reliance Limited. Okay. Now this legal existence is only on the name of Reliance Limited only. Reliance only. Reliance is a separate legal entity. They have their PAN card. Everything has been established as a separate legal entity. In this, they have several businesses, maybe textile businesses, and they have a telecom, as I said, Geo. Like that, they have
Mobile.
different industries, maybe different segments and different units. We can call it anyway. Different business units, different divisions they have. What they're doing, they're choosing one of the divisions and they're making it as a separate legal entity. They're forming a new company as a Geo Limited. Geo Limited. So even this company will also go to the IPO and they will also have their own shares capital. They don't have a separate identity. They don't have assets and liabilities. And Geo Limited will be having shareholders and everything. So basically, they're making it as a separate legal entity. Reliance Limited is a separate legal entity. Similarly, they're making it as a separate legal entity for the Geo Limited as well. They're separating it from the main industry, main company. That is called spin-off. Everyone understanding? Hello.
Yes, Mahesh.
Earlier, it was only one company, but now they're making it as a separate legal entity. What about the assets and shares, sir? In Reliance company, they may have all this telecom industry related assets and shareholders, everything, right? As Reliance company, when I invested, it's not only for the textile or Reliance separately. I've invested by considering all the Geo, telecom industry, all divisions I have considered. I've invested some amount in the Reliance industry. Now we are switching the company into a different company. You're making as reducing the value of, you're reducing the value of Reliance Limited. How can be more fair to the remaining shareholders? Is it a fair? If one division is dividing from main industry, the value of Reliance industry will reduce, right? Definitely. Suppose let's understand
Yes.
Reliance industry value was 100 rupees. Maybe each division is contributing different values. Textile industry may be contributing 80 rupees and telecom industry also may be contributing 20 rupees. Now if it is making a separate legal entity, if it is dividing from the Reliance Limited, do you think that Reliance Limited will have a same 100 rupees value?
No,
It will reduce.
How?
because
If it is
whatever the
reducing,
industry will be
if it is reducing again, how it's going to be fair to the investors?
And Reliance shares will be allotted to the Jio and shareholders also.
Sorry, come again.
Those who are holding the Reliance shares, they'll be getting a Jio shares.
Please
Oh, free of cost.
understand the process of spin-off first. If company is dividing, I mean, any specific segment or division, dividing and making it as a separate legal entity, Reliance Limited will also transfer some assets and liabilities to the Jio Limited. They will also transfer the assets. We said 20% is occupying. The value of Reliance Limited is occupied by 20 rupees by the telecom industry, right? So that same 20 rupees assets and liabilities will be transferred to the Jio Limited. Earlier, I had a share price which is holding 125 rupees, 20 rupees, or let's say same 100 rupees, 100 rupees share in Reliance. Okay. Even in this case, they will also divide the share price in 8:2. In this way, so they will divide 80:20. Let's make it 80:20. That means your 100 rupee share price will be divided into two shares. How? 80% of share will be in Reliance. Jio Limited will be having how much? 20%.
20%.
So your 100 rupees share is becoming two shares.
Yes.
100 rupees share, we have one share, is becoming into two shares. One share in
This one is 80, one plus 20.
one share value is 80 rupees, and another share value is rupees in
20 rupees.
20. Both together 100 rupees only. Here two shares. Here it's becoming two shares. But the value is same. Is everyone understanding?
Yeah, my.
Is everyone understanding? Non-commerce students, everyone?
Yes, sir.
Yes.
Earlier, I had only one share in Reliance company, which is worth of 100 rupees. Due to this spin-off, they're separating this Jio Limited. So Jio Limited will be separate legal entity. So if it is separate legal entity, Reliance Limited need to transfer some assets and liabilities to the Jio Limited as well. So let's assume they have transferred few assets and liabilities to Jio Limited and they made it as a separate legal entity. What about number of shares holding? I am holding my share in Reliance company only, right? If these people are transferring these shares to the, transferring some assets or liabilities to Jio Limited, my value of share will reduce in the Reliance Limited. For that reason, what they are doing, how they are compensating my value of share, how they are compensating? You will get another share in the Jio Limited also. You have one share in my Reliance company, right? I'll give you one more share in the Jio Limited also.
Yes.
They are giving one more share in the Jio Limited also. But share price will reduce. Earlier we had 100 rupees per share in the Reliance Limited. Now we are making it as a 80 rupees. And remaining 20 rupees, you will get one more share in the Jio Limited. Again, I'll be having only 100 rupees, right? In the Reliance Company Limited 80 rupees, Jio Limited 20 rupees. Again, my value of share will be 100 rupees only. Is there any impact in total capitalization? As an investor capitalization, is there any impact in total?
No.
No, right? No impact. But there is impact in number of shares. Understood? Understood or not?
Yes, sir. Understand.
Everyone.
Yes, sir.
Yes, sir.
Now, we will see the reasons why company should go for the spin-off. Any reasons? Even if Reliance company is making it a separate legal entity, what would be the reasons? Any guess?
To save the taxes.
Taxes. How? How they will save the taxes? Hmm? How they will save the taxes? Hello.
Don't know, bro.
Okay,
Not like
let's
that. I
talk
think
to
they're
the valid point because let me talk about this taxation value. Normally, each company will have a different slab rates. Again, no, tax is not something valid point. Tax is not a valid point. What else?
So increase the profit stability.
increase the profit.
Profitable.
How I am going to increase the profit? If I am making a separate legal entity, how I am going to increase the profit? Which company profit will increase here? Reliance company profits will increase or Jio profits will increase?
Geo profit will be.
Jio profits. If Jio profits are increasing, even if it is in my Reliance company itself, it would be good for my Reliance company also, right? Why should I make it a separate legal entity? Why should I need to recognize those profits separately?
To implement their business plans. and
Almost we are close to
company-
the answer. Let me explain. Basically, to unlock the benefit, guys. To unlock the benefit, what is the benefit of unlocking? Let's understand. This Reliance company having two, divisions, textile and telecom. Okay. Let's understand the same example in different way. Maybe telecom industry is contributing only 20%. Okay. Textile is contributing only 20, but this telecom is contributing 80. Is contributing 80, which is having a more high potential for the value of business. Which
Jio
industry? Telecom only, right?
Telecom. Yes.
Let's assume Reliance company is having a profit ratio like this. Okay. Total profitability, they have 60 rupees profit. 60 rupees profit out of 100 sales. They have 100 sales and the profit is 60. Okay. Out of the 60 rupees profit, so we can say what is the profit of Reliance Industry? We can say 60%, right? 60% profit because sales is 100, profit we are making 60. So out of sales, it is 60% profit we are making as a Reliance Limited. Let's assume from the telecom industry itself, they're contributing 50 rupees profit. How much profit? 50 rupees. And textile
50
industry is
rupees.
contributing only 20 rupees.
10 rupees. 10 rupees.
10 rupees. So altogether 60. So total profit is 60. The profit of Reliance is 60%. This is one case. Suppose if I make it as a separate legal entity. If I make it as a separate legal entity. Let's assume this also like for 20 rupees, they're making not 20, yeah? Yeah, 20, they're making 20 rupees sales. We have. They're making 10 rupees profit. Here also they're making 80 sales and they're making 50 rupees profit. Okay. Now, if I made it as a separate legal entity, let's keep it as a side. I'll keep this telecom industry separately. For 80 rupees sale, we are getting how much profit? 50 rupees profit. So what is the profit ratio of Jio?
Sixty percent average.
60% here also.
Here also approximately 60.3.
Maybe let me change the sales values here. For 40, here for 60. Okay, now tell me. For 60 rupees itself, they're making huge profits. Okay,
Yes, 90%.
90%, right? Suppose if I make it as a separate legal entity, what would be the profitability ratio of Jio? 90%, right?
Increase.
90%.
Definitely, Jio profitability will be 90%. Suppose if I don't make it as a separate legal entity, I want to consider this as the Reliance profit only. Reliance profit is 60% only.
60%.
Yes.
Yes, sir.
So overall industry wide, if I see the value, I have a huge value for this Jio, this one also, Jio also. I'm able to get a 90% profitability. I can showcase to the industry as I'm getting 90% profit. Because of having this 90% business in my combined business, I'm getting only 60% as the overall profit. If I can make it a separate legal entity, I can show this company itself having a more profitability ratio, right?
Yes, the liquidation will be increasing.
And one more thing, this textile industry for 40 rupees sale, I'm getting only 10 rupees profit. That means what is the profitability?
25%.
25% only.
25%.
So this impact is also having on this telecom industry. If I'm having a Reliance industry, I would need to consider all industries, all domains, which is contributing 60% only. Suppose if I'm making it as a separate legal entity, I can have a more profitability, more thing, right? If I form it as a separate legal entity, if I go for IPO, even the Geo industry itself, because of I'm having high profitability ratio, more value I can acquire from the public. So my value of Geo Limited Geo company itself can be increased. But if it is available in the same Reliance company, it is not possible because it's having only 60%. There is a difference, right, from 16%, 60% to 90%. If I ask people to observe only this telecom Geo profits, would they consider? Will they consider? No. As a Reliance Limited, obviously they will consider the overall performance of industry, overall performance of company. So though they have an industry advantage, what is the industry? Telecom industry advantage, still they are not able to encash it. That's the reason they are making this a separate legal entity and they are going for increasing more value on the Geo Limited to unlock the benefit of industry. They have more industry benefit on the telecom industry, so they are going to unlock it. If they want to unlock it, they have to make it as a separate legal entity. That is the reason. So this would be the one reason for the spin-off. And there is a one more reason. Suppose there is another industry in the same Reliance company. There is another industry. Let's say like maybe they're in tech, some educational. Okay, education also, which is having some loss. Education industry having some losses. Let's assume they have a minus 10 loss. In this case, what will be the profit? These two industries having 50 rupees and 10 rupees profit, but it is having 10 rupees loss. In this case, what would be the total profit of Reliance?
50 rupees.
50 rupees only. Because of this 10% loss, it is impacting the overall Reliance industry performance, right?
Yes.
Isn't it? Yes or no? Suppose if you want to close this business, if I want to close down this business to pay off these liabilities, which assets I have to use? Maybe education
Brilliant.
industry division also may have few assets and liabilities. Because of
Yes,
huge
yes.
liabilities, because of huge losses, I have to settle all these losses and liabilities. If you want to settle all these liabilities, obviously I have to use remaining assets only, right? Textile industries,
Yes.
telecom cash only I have to use, right?
Yes.
Yes or no? So obviously this
Yes, ma'am.
bad performance would impact the remaining divisions, remaining industries also. For that reason, what I'll do, I'll keep it aside. I have to make it separate from the existing remaining industries. So I'll also go for the spin-off. I'll make it as a separate legal entity for the education institute itself. So after making a separate legal entity, if you want to liquidate this business, I don't need to use the cash balance or asset balance from these companies, these segments. Because it's separate legal entity. If there is any impact on this one, only that company assets will be sold, and whatever I realize, I'll be given to the liabilities. If I want to pay off the liabilities, I'll use only the education institute assets only. I don't want to use the telecom assets. I don't want to use the textile assets because now it's a separate legal entity. Getting the point?
Yeah.
Everyone.
sir.
అర్థమవుతుందా
Yes, sir.
For this reason
Okay.
also, companies will go for the stock split. Did you guys watch this movie Son of Satyamurthy?
Yes, yes, ma'am.
Yes, sir. Yes, sir.
So if you observe the Son of Satyamurthy movie, during the movie introduction itself, hero father will expire due to some accident. Then Rajendra Prasad will come and he will advise, he will give one wonderful advice. What was that advice?
IP. Close that.
IP. How the IP?
IP.
There were few shares after his father expiry, our share price will reduce. So it seems there is not going to be any value for the shares. Though we have shares, but there is no value for the shares. But as a sons, they have to clear off all the debts and everything. So what Rajendra Prasad will advise? Let's transfer all the assets to on your mother name. So if all assets are in her mother name, they cannot touch their assets. Whatever the assets having on the company name, maybe the shares or something, they can sell and they can pay off the liabilities. But assets they cannot touch because they have transferring the assets to her father name, his mother name. So when transferring the entire assets to his mother name, that is also spinning off. They spin off all the assets and they transfer into another person. So once they transfer to another person, they cannot touch those assets. As a liabilities, you have huge loss, huge liabilities, you have huge debts. Still, you can sell the available assets, available shares, and you can pay off the existing debts. If they're not able to pay, we call it IP, insolvency petition. No one should question. That is also spin-off. Just watch that movie one more time, you will get that point. Everyone understood?
Yes, sir.
Yeah.
Yes,
Now
sir.
we'll understand the impact of this. Now tell me, is there any impact on cash?
Yes, Mahesh.
How?
Yes, sir.
Because whatever the assets and liabilities will transfer to spin-off company also. Then cash
Sorry,
balance
come
is
again.
also because Reliance 80% whatever the Geo is there, now they have to transfer to Geo. Whatever the assets from Geo, they have to transfer to Geo only. No? Hello?
Yes, I'm not getting your point. Come again.
As per Reliance, whatever the assets and liabilities, everything will be there, total assets previously. Now
Okay.
Geo is separated. Whatever the Geo assets and liabilities will be separated to Geo.
I'm not understanding your point.
Because
So they're transferring the assets and liabilities from Reliance to Jio.
Geo, yes.
Okay.
In that case, assets and liabilities will be changed. Automatically cash balance will be changed.
How it's going to change as a fund perspective? Don't discuss, don't think about cash balance of Reliance, cash balance of Jio. We are talking from the fund perspective. It's all related to fund. We have a fund. In the fund cash balance, how it's going to impact? If a fund are holding 100 shares,
Previously,
100
yes,
shares in
but
Reliance. Let's understand
yes,
in this
okay,
way. Okay. 100
previously,
share.
okay,
One second, sir. So in 100 shares
please
in Reliance
continue.
company, each share price is 100 rupees. Okay. Now, for this 100 shares in Reliance company, I'll be having 100 shares. Each share price is how much? 80 rupees. In Jio also, I'll be having 100 shares, but share price is 20 rupees.
20 rupees.
Right? So in this case, even before this spin-off also, my value of share is 100 into 100. How much? 10,000. Here also same 100 into 80. Here also
80,
100 into 20.
8,000,
So this is
20.
after spin-off. This is before spin-off. Total my fund shares only. Now this is a scenario. Now you understood, right? Now tell me, is there any impact on cash? In the fund cash
No,
balance?
sir. No.
Anyone?
No, sir.
Are you guys sure?
No,
No,
no
previously
impact, sir.
the previously fund will be Reliance fund. Now the
Yeah,
fund is
Reliance
changed
only.
to two.
Yeah, here it's Reliance only.
Now the fund will be changed to two entities. One is
Yeah, two
Reliance, one is
entities.
Geo.
Yes, two
Now
entities.
automatically Reliance fund will be decreased.
Reliance?
Fund will be decreased.
Reliance fund. Fund means are you talking about cash balance?
No fund.
Fund means what fund?
Because whatever the 100 shares will be there, the 100 shares value will be 80 rupees. No?
80 rupees only. That's why
Split
our
it.
holdings also reduced to 100, 10,000 to 8,000.
Yes, that's automatically the fund value will be reduced.
Why again in the Geo balance I'll be getting 100 shares, right? For 20 rupees.
Is somehow confused. Nice. I
No,
check.
no, understand.
For me,
See,
actually, for me.
okay. So this is the original Reliance. Okay. How many shares I have in the original Reliance?
100.
Before spin off, 100 shares.
100.
Each share price is 100 rupees. So as a fund,
Yes, sir.
I have investment. How much investment value? Shares value.
10,000.
Shares value how much?
10,000.
10,000 rupees, right?
10,000.
10,000 rupees. There is a
Yes, sir.
spin-off. So in the spin-off, they're announcing we are going to issue 100 shares in Reliance company at 80 rupees. And you will also get 100 shares in Geo company for 20 rupees.
20.
My fund holding 100 shares, right, in Reliance company. Whoever holding 100 shares in Reliance company, they will get 100 shares at 80 rupees each. Earlier we had 100 rupees each, but now we are reducing to 80 rupees.
Yes, sir.
So that I'll get 100 rupees into 100, sorry, 100 shares into 80 rupees. In Reliance, I'll be having 8,000 shares.
8,000.
Similarly, because of spin-off, you will get
Yes,
100
sir.
shares in Geo company also at rupees 20 each. So in Geo company, how many shares I'll getting? 100 shares. At what price? 20 rupees. So now I have 200 shares. 200 shares value is 10,000. Is there any change in the total value of fund asset?
No change.
No, right?
Yes, sir. No change.
Are you guys understanding?
Yes.
Yes, sir.
Narmal, sir, any doubt?
Yeah, now I understand.
That's okay, sir. Tell me if you had a doubt, we'll discuss here.
No. Actually, I thought it one more thing. Actually, suppose
Okay.
previously Reliance having one fund, now change it to two different funds. I
No,
thought
not
like that.
different fund.
That is the reason.
Don't think
That
from
is the
the.
reason I got it.
Yeah, I
Yes,
understand. That's why
After
we are
that,
talking
your
from the.
clarification, I got it.
We understood the stock split from the company perspective and investors perspective. But here we're talking from the fund perspective, investors. As an
I got
investor,
it.
I'm holding 100 shares, which is worth of 100 rupees. Now it's divided into two companies. In one company, I'll be receiving 100 shares. Another company also will be receiving 100 shares. But share value has reduced from 100 to 80 here. But for the reducing value of 20 rupees, I'm getting compensation in the Geo company.
Yes.
So altogether again, I'm having 10,000 rupees worth share only. So no impact on the total share value which I'm holding. Now tell me, is there any impact on the share cash balance?
No.
Because of this transaction, is there any change in the cash balance?
No change, sir.
No. This is a normal case. In most of the cases, there won't be impact in the cash balances. But in few cases, even the spin-off also will have an impact. Can anyone guess those cases?
One company will be shut down.
One
That
company will
case
be
will
shut down?
be. In that case, will be impact will be there.
No. Here, we spoke about an equal share, like a 80 is to 20. If they are issuing from somewhere like 73 per 70 is to 30 or something in odd numbers, if they're issuing, if they're dividing the share, here the share value has been reduced to 80 to 20. If they are dividing it in odd way, there will be, suppose in this company, they may have 100 shares, they're dividing into 80 shares to 20 shares like that. If they're dividing in a different way, some shares will be left in a 2 or 3 shares for each shareholder, which they cannot contribute in any one of the company. For those shares, they will settle some cash amount. We call it the fraction of shares. Fraction of shares. So fraction of shares will be settled in a cash balance. Okay, only in odd cases, not in everywhere. But if they're dividing the shares in a different ways, not even, not in even order, then few shares will be left with the companies, with the shareholders, where they cannot get in any one of the company. In that case, for those shares, they will settle in the form of cash balance. In that case, there will be impact on the cash balance. Otherwise, there won't be impact on the cash balance. Understood?
Yes.
Yeah. What about
Sir.
number of shares?
Increase.
Number of shares?
Will be increased.
Increase.
Normally, in this example, we are saying that there is an increasing number of shares, but
Yes.
the spin-off can be done in different ways. Basically, here they are giving shares and reducing the value,
Okay.
but
Okay.
they can divide the shares also. How?
Okay.
I'll be giving 80 shares here, 20 shares here. In that way, also they can divide.
Okay.
Out of you have 100 shares, right? 100 shares,
Correct.
80 shares will be in the Reliance, remaining 20 shares will be in Jio, but value will be same, 100 rupees, 100 rupees. In that case, no change in the positions, right?
Yes, sir.
Here we divided into value of share, but in some cases they may divide the shares also. If you have 100 shares, 80 shares will be in the Reliance, 20 shares will be in the Jio company, but share price will be same, 100 rupees, 100 rupees. There will be those kind of scenarios also. In those cases, there won't be change, but in this case, there will be change. Understood?
Yes, sir.
Yeah. Price of share. Each share price
Decreases.
decreases. Normally, it will
Decreases.
decrease. In each company share price, it will decrease.
Yes, yes.
Okay. What about NAV of fund?
No change.
No
No
change.
change, sir.
There won't be any change. What if, sir, if there is any settlement of cash for the fraction of shares, is there any impact on NAV of fund?
That time will be there because
How?
the number of shares. Because
Again,
but
you're not understanding the core point.
Oh, no.
Even
Correct.
even if
That
they're
time
under,
share
even,
value will be decreased. Yes,
yeah,
correct.
share
Sorry.
value will reduce.
Yeah, correct.
The same
Yes,
amount
yes,
where they're
correct, correct.
settling in the form of cash.
Yes, yes.
Both are an asset side, right?
Automatically.
Cash is also an
Yes,
asset.
yes.
This value of share is also an asset only.
Correct.
So no change in the assets, no change in the
Small,
NAV per share.
small deviations will be there.
Yeah. Is there any change in total NAV per share?
No.
No. Here also no change. That's it, guys. Now we understood, everyone?
Yes, sir.
Everyone understood?
Yes, sir.
Yes. So revise this concept and try to understand the impacts. Impacts are very important. Maybe meaning wise, only few interviewers will ask you what would be the change, what would be the uh, share price impact, and the number of shares increasing or reducing. What is the meaning of reverse stock split? These kind of questions will get for like 1 year or 2 years experience candidate. But few companies will expect a core subject like the impact of NAV of fund. That's the main fund because we will be working for the NAV of fund, right? Funds perspective only we have to work. So there would be questions from the fund perspective, especially in case of spin-offs. If you are holding any shares in the company, if company is going for spin-off, do you think that there would be impact on the NAV fund like that? Definitely, you guys will get confused. If company is spinning off, our share price will also split. Our assets will get split. There will be impact, but there won't be impact on the total NAV. But they will also ask you the reason why there is not going to be impact. Then we have to explain the total examples. I'll be reducing the value of shares or maybe the number of shares in holding company. But for the same, I'll be having a compensation in the subsidiary company. And another company also I'll be having a compensation, right? The value of shares and the
Yes.
number of shares. So the total NAV of total asset of shares or asset of a fund won't be changes. That's the reason there won't be impact on the total NAV of fund also. In that way, we have to explain. Is everyone okay with these concepts?
It's fine.
Is everyone good?
Yeah.
We understood this as well. Then we will talk about mergers and acquisition tomorrow. Then we will close this mandatory concepts. Then we have to talk about voluntary. In the voluntary again, we have a bonus, right? Buyback. What else we have? Bonus, right shares, buyback.
Offer
ఇంకేమున్నాయి?
for sale. OFS.
Sorry?
Offer for sale. Call on public offer.
Okay. These are the main, but major thing is only these three: bonus, right shares, and buyback.
FPO also.
No, those won't be part of corporate actions. I mean, which is impacting and all. So we don't discuss the safety bond. If we're going to talk about all these corporates, even we have to declare, we have to talk about interest payment also. So we are not going to talk about it. Majorly, we'll talk about these: bonus, right, and buyback, and we'll talk about tender offer also. It's also expected tender offer. Okay? We'll talk about all these voluntary corporate actions in next slide. Okay. Anyone have any questions?
Not-
Is
Nothing,
everyone
Mike.
good? Is everyone good?
Yeah, good.
Okay, then I'll stop the recording.